Hey guys, it's Sebastian from AskSebby, and today we're going to look at how utilization can destroy your credit score, how to game it, and also my experience with this. Before we dive in, a big favor is to give this a thumbs up, pretty easy way to support the channel, and if you really like this stuff, consider subscribing. If you like my hair or if you don't like it, let me know over on Instagram where we're almost at 10,000 followers. So the reason this sounds pretty familiar as a topic is because Ben from Credit Shifu did a pretty similar one. So no, I did not see his video from a few days ago, realize that, hey, this is a good topic, hop into my time machine to go back 2 weeks in order to set up the circumstances for myself for this video. Or did I? Instead, this was pretty much my own fault because I forgot about how US Bank ends up reporting your information. So with most of the major issuers that you can think of, Citi, Chase, American Express, Bank of America, they look at your statement date and report that to the bureaus. They basically share it with their friends saying, hey, this is the utilization. US Bank is the weirdo of the bunch, and instead of doing that, instead of looking at your statement date, they look at the balance at the end of the month. As someone who doesn't really use their US Bank Altitude Reserve card too much other than for the retention offer, and if you look at my statement, you can see exactly this, that most of the points, if not all of them, are from that retention offer, I kind of forgot about this. So jumping back to the end of June, I had a few relatives ask me to buy them Costco gift cards because apparently they really want to shop at Costco, but they don't want to pay for a membership. And if you, as a member, buy them gift cards, then they can use those gift cards in store. With that card, you get 3x back on mobile transactions, and the fact that you can use this towards travel in the next year, hopefully, if I keep getting these retention offers, that means I'm getting 4.5% return on spend. So that $7,000 I spent in gift cards that I'm getting reimbursed for, that equals 21,000 points, which equates to $315. So my balance, because I forgot how US Bank worked, was 7,200 out of 7,500. As you would expect, it's a pretty big drop over on the FACO side as well as the FICO side. I'm not going to focus too much on this one because I think Credit Shifu did a pretty good job walking through what happens to his score. The more interesting bit to me is the fact that having one card with very high utilization is worse than having multiple cards with a smaller one. So a quick example, imagine if you had 10 cards and each one has a $10,000 credit limit. It would look worse in situation number 1 where you have one card with 9,500 used out of 10,000. Instead, it would technically be better having 10 cards each at $900 rather than that one big one. The reason this ends up being bad is because it's very similar to what people who are committing fraud are doing. So they create synthetic identities or they end up just maxing out their credit and then they end up doing that and busting out for each of the issuers. It's pretty much the end game of fraudsters. For all US Bank knows, they might think I'm just cashing out the money and then running to Mexico or Bali. On your end, the reason this is bad is because there are going to be circumstances where this happens, especially when you're earlier on in your credit history and you have these smaller credit limits. Another big problem use case is if you've had a lot of big tax payments. I know for most people, 2020 hasn't been a fun year, and I feel like a lot of people are doing more side hustles and things on the side in order to make money. If you are someone affected by this, I'd strongly recommend looking into Catch. Catch is the first personal portable benefits platform for independent workers. If you're a contractor, if you're someone who's self-employed, if you have a side hustle, maybe you're a YouTuber like me, or if you're just a non-traditional employee, they basically take your paycheck and help you split it into different things such as insurance, retirement, as well as taxes. I've definitely gotten a lot of comments over on Instagram about people who are starting their own side hustles and realizing that a lot of it goes to taxes. If you want to support the channel, a very easy way to do that would be to go check out Catch and use code AskSebby20. You get $25 for signing up for saving that first $100, and it's also free. So diving back into it, why does the utilization for your credit score matter? And also, how do you game this? I feel like I've talked about this before in the past in quite a few videos, but I think this is a good refresher. So credit matters if you're someone looking for a mortgage, car loan, or even if you're looking to rent a place. I've had friends move to San Francisco from the UK and they had to pay the whole year up front because they didn't have credit. So instead of having the luxury of paying $3,600 per month, they pretty much had to pony $40,000 up front. If you're someone who's playing the credit card game, then having this low utilization also decreases the chance of you getting shut down. So for most banks, they want to make money based off transaction fees and maybe based off interest, depending on the bank, but they don't want you to bust out. They don't want these very high balances. They make about this much from most people and they want about 20 of these, but one person busting out can destroy all of their gains. The final reason is because there are going to be some industries that require you to actually have good credit. They might not be focused on the score as much, but they're worried about you having too much debt. The military as well as finance roles are a pretty good example of this. The reason for this is because they want to make sure that you can't be bought out or you're not going to be enticed to sell insider data. Hello, mate, we'll help you pay off all your credit cards if you sell us some insider data. Randy, don't put that part in. Moving on to how to game this. So there's generally two ways. The first way is going to be using business cards, and the second way is going to be prepaying. With business cards, most of the issuers don't report your utilization to these credit bureaus, meaning that you can be at 99%, and as long as you keep paying them and you pay the minimum balances and they're not worried about you kind of running away, then you should be fine. There are two exceptions to this, and that's going to be Barclays as well as Capital One, which does tend to report your business activity. Does that mean that you can default on it or you can just not pay it off? So no, because most of these places will report it if that happens. They're just not reporting your utilization. This is really helpful if you're someone who's a business and you want to float money. So a really good example of this is if you have inventory, if you run a convenience store, or maybe you resell stuff online, you might not be able to sell that stuff within 30 days. You might need a bit more time. So this gives you a bit more leeway and it doesn't negatively tank your score. The second major way to game this is going to be prepaying your cards. So you know when the statement date is, just because you can look at the prior ones from that same account and you know when they're going there to take the picture. So imagine if American Express is taking a picture on the 26th and you know this, so you can prepare, and that way when they share it with their friends, with these bureaus, it's going to look good. So that means you can fix your hair, you can look good for that picture to make sure that everything's fine. And the way to do this is by prepaying. So doing a quick example because people get confused by this, my Hilton card has a statement date of July 17th. So that's when they're going to take that picture. I had a large balance due to some business spend, but I ended up paying off $4,000 on July 11th. This means that when my statement closes tomorrow, I'm going to be at 87 out of 4,500, so 1.9% utilization. Generally 1 to 9% is pretty good, but I try to keep it at 1 to 5%. If I didn't do this though, then I would be at $4,087 out of $4,500, and that's almost 91%. So by prepaying, I end up removing a lot of the risk, and on my end, it's something that reflects well on the credit. If you are someone that has screwed up on this, we'll talk about how to adjust and what you can do towards the end. Even if you're someone who doesn't really care about the score moving up and down too much, and I think that's fine, you might still be worried about getting shut down or raising flags and having to deal with a financial review from American Express. For me, it's something that doesn't take too long, 30 to 60 seconds, and it minimizes the chance of me getting a financial review, which would be substantially more annoying. Basically know when your statement dates are and then do a prepayment maybe 5 days before that. Maybe I'm crazy, but I feel like most people are spending 12 to 16 hours at home in front of their computers anyways, so it's not really too much time. So if you are someone affected by this and you see your score tank, what can you do? So the only thing you can really do is to pay off that account and then to wait for that score to go up. So even if it drops something like 60 or 70 points, it should go back up 50, 60, 70 points once you do that payment, because it shows that that risk factor that they're worried about is no longer there. Picture with a black eye versus picture normally. So obviously you want to pay off that balance in full because you don't want to pay interest, and that doesn't make any sense. But you might also want to use it for at least one small transaction. That way they push that smaller utilization. I'm not 100% on this, and I think it depends on the issuer, but if you want to play it safe, you would just have that small balance. That way it pushes that small utilization. The really good thing is that this is one of the easiest things to fix in your credit compared to a lot of the other ones. So if you have missed payments, if you have derogatory marks, if you have defaults, those are very hard to fix. This is a 1 month fix if you have that money, and ideally you don't spend money you don't have. Again, if you want to go check out Catch, you can use code AskSebby20 to get a free $25 on the first 100 that you're saving. My question for you guys is, what's been your experience of utilization and how do you manage it personally? Or is it something that you don't really bother with because you feel like it's too much work? Also, if you have any other tips for other people in the community, leave them down below because I feel like it's something that benefits a lot of people. If you liked the video, give it a thumbs up. It really helps us out. If you know anyone else who'd benefit from what we just talked about, share this with them. It'll probably help them out. But otherwise, hope you guys liked it. See you guys next time.